Hello, friends. If you're on Medicare and your Part B premium has been pulled out of your Social Security check at a number higher than $202.90, I need you to stay with me for the next few minutes because there's a real chance you're being charged a penalty you don't actually owe anymore, and there is exactly one form that fixes it. Here's the situation. The standard Medicare Part B premium for 2026 is $202.90 a month. But if your income was higher than a certain threshold, Medicare adds an extra charge on top of that called IRMAA, which stands for Income-Related Monthly Adjustment Amount. For 2026, that extra charge kicks in if your income was above $109,000 as a single filer or $218,000 for a married couple filing jointly. Depending on how far above that line your income was, the surcharge can add anywhere from about $81 to nearly $487 a month on top of the standard premium. For some people, that means a total Part B bill of close to $690 a month just for Part B. Before we go further, subscribe to this channel and turn on the bell. Here's why that matters specifically for this topic. Medicare bases this year's charge on your income tax return from 2 years ago. That means your 2026 premium is based on what you earned in 2024. If your life has changed since then, retirement, loss of a spouse, fewer work hours, Medicare doesn't know that automatically. Nobody at Medicare reviews your file and adjusts it for you. The charge just continues based on outdated information unless you take action. The people who are subscribed here find out about this kind of fix while it can still save them money. The ones who aren't usually find out years later, after they've paid thousands of dollars they didn't have to. So let's get into exactly who this applies to and what the fix actually is. The fix is a form called SSA-44, officially titled Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. Think of it like this. Medicare looked at a photograph of your finances from 2 years ago and is charging you based on that old picture. Form SSA-44 is how you show Medicare an updated photograph, the one that actually reflects your life right now. You're not appealing because Medicare made a math error. You're telling them the picture they're using is outdated and here's the current one. Here are the specific situations, what the Social Security Administration calls life-changing events, that qualify you to file this form. I'm going to go through each one because if even one of these applies to you, this is worth doing. Situation number 1, you stopped working or reduced your hours. If you retired, were laid off, or cut back significantly on work since the year Medicare is basing your premium on, that counts. A lot of people don't realize that the income figure being used might reflect a year when they were still working full-time, even though they've since fully retired. If this is you, gather your most recent tax documents or a written statement of your current income, and that becomes your evidence for the new lower figure. Situation number 2, you got married, divorced, or became widowed. Any of these changes your filing status and can dramatically change how your income is evaluated under IRMAA. If you lost a spouse, in particular, your household income may have dropped substantially, and Social Security needs documentation of that change, like a death certificate, to recalculate your premium based on your situation now, not your joint income from before. Situation number 3, you had a one-time spike in income that doesn't reflect your real situation. This is the one I see causing the most unnecessary overpayment. If you sold a property, did a Roth IRA conversion, took a large withdrawal from a retirement account, or had any other one-time event that temporarily pushed your income above the threshold 2 years ago, Medicare doesn't know that was temporary. It just sees a high number and charges accordingly. Think of it like a thermostat that got triggered by someone briefly opening a door on a cold day. It doesn't reset itself once the door closes. You have to go reset it yourself. If your income has returned to its normal level since that one-time event, this situation applies to you. Situation number 4, you lost income from a pension, or you experienced what Social Security calls a loss of income-producing property. Things like a rental property that stopped generating income due to a disaster or a forced sale at a loss. If your income dropped because a consistent income source disappeared, not just fluctuated, this counts. Situation number 5, An employer or your former employer closed or went through a major reorganization that affected your income, such as a settlement payment, a pension plan termination, or a similar disruption. This one's less common, but if it applies to you, it's specifically recognized as a qualifying event. Now, here's how the process actually works once you've identified your situation. You can get Form SSA-44 directly from ssa.gov, or you can pick one up at your local Social Security office. The form asks you to describe which life-changing event applies, give an estimate of your current income, and attach supporting documentation. That might be a recent pay stub, a written statement, a death certificate, or your most recent tax return if it already reflects the change. You can submit it by mail or in person at your local Social Security office. You do not need to hire anyone to do this for you, and there's no fee. One important detail: if you've already received an IRMAA determination notice and you disagree with it, you have 60 days from the date on that notice to request a reconsideration. But if your situation is one of the life-changing events I just described, you're not limited to that 60-day window in the same way, because you're providing new information about a change in your circumstances rather than disputing the original calculation. If you're not sure which applies to your situation, call the Social Security Administration directly at 1-800-772-1213 and ask them to walk you through it based on your specific case. How many of you watching this didn't know this form existed until right now? Let me know in the comments, because that tells me how many people are out there potentially overpaying without realizing it. Let's bring this together. If your Medicare Part B premium is higher than $202.90 a month, that extra amount is the IRMAA surcharge, and it's based on your income from 2 years ago. If your income has dropped since then because you retired, lost a spouse, had a one-time income spike that's already passed, lost a pension, or experienced a similar disruption, Form SSA-44 is how you tell Social Security to recalculate based on where you actually stand today. Get the form at ssa.gov, gather your documentation, and either mail it in or bring it to your local office. This costs you nothing, and it can save you hundreds of dollars every single month for as long as the lower income applies. If this helped you, subscribe and please share it with someone you know who's on Medicare and might be paying more than they need to. One phone call or one form, and that's the entire difference between overpaying for years and getting this fixed for good.